Peace talks fail, oil spikes 7%, but yet the 10-year Treasury seems to be holding steady, if not declining ever so slightly. So the big question is, where are rates going to head this week? And honestly, after the weekend and after the fact that the ceasefire fell apart, I initially expected interest rates to rise. Again, I am still in that camp that I believe that we are going to escalate to some level of military conflict in the near future. But it looks like we are trying to do a power play of military assets to get Iran to come to the table, agree to our terms, and then move forward. So time will tell what's going to happen. But what's interesting is oil, obviously, on a global level seems to be going up because the strait continues to be closed, given that now we are the ones closing it. However, on the flip side of that, traders from a mortgage-backed security standpoint feel like we are going to get some level of ceasefire and some level of agreement here in the near future. They believe Trump is going to be able to pull through. So it's going to be interesting to see how that really plays out. But again, it could be very volatile. So I would be very careful in how I approach this market. On the data side this week, we do get PPI that's going to be coming at us, as well as initial jobless claims. And if you remember last week, initial jobless claims was a little bit higher than forecast. Should we continue to see that trend, even if it's ever so slight, I think that's going to allow the Fed towards the end of the month to hold everything steady. I think their vernacular will change a little bit, given if inflation just continues to come in right at its number and not spike due to the conflict and due to the oil pressure. So it's going to be interesting to see how that all plays out. So who am I? My name is Kevin Weedmark, aka the Mortgage Mouth, every day bringing you up to speed of what happened in the marketplace, how it affected interest rates, what we have for the rest of the week, what we think is going to happen in interest rates, and should you float or lock. Look, I'm still in that camp of float. Unless you have the absolute necessity to lock, I would be floating this. I would be assuming that at some point we are going to get to a ceasefire, the strait's going to be opened, and there'll be lower rates ahead. So float if you can. If you need to lock, I say it each and every time, two things. Make sure you're asking for those seller concessions, and make sure you're talking to your lender. If you don't have one, would love to be your person. Make sure you're talking to your lender with regards to yield spread premium. They can utilize that yield spread premium, help you minimize those closing costs. So in the future, when you want to refinance and take advantage, you're not paying closing costs twice within a year time frame. All right, y'all. Have a good evening. Coming to you tomorrow, another episode. Until then, cheers.